Turning our attention now to the ASX, here's Matt Birney and Bulls and Bears with the latest public company views and interviews.
Welcome to Bulls and Bears, brought to you today by Blackstone Minerals, ASX code BSX. I'm Matt Birney and I'm joined now by the Managing Director of Blackstone Minerals, Scott Williamson. Hi, Scott.
Hi, Matt.
Blackstone Minerals has experienced significant success with the drill bit since acquiring its Ta Qua nickel project in Vietnam in 2019. The project came gift-wrapped with a modern but mothballed mine and significant in-ground nickel resources. Whilst the company has tabled a pre-feasibility study already on the mining operation, its more recent PFS that looked at downstream processing the mined nickel and associated minerals into a lithium battery-grade nickel cobalt copper product really has the market meerkats sitting bolt upright. Scott, some of your PFS numbers are right off the scale and we'll get into them in a minute. But for now, exactly what sort of downstream product are you looking to produce here and who will you sell it to?
So, Matt, we're looking to take the nickel concentrate from our mine and our third-party feed providers around the world. We'll bring in nickel concentrate and we're going to convert it into the first stage of the lithium-ion battery, which is called the nickel precursor product. So it includes cobalt and manganese in a ratio of 8:1:1, and that's the first stage of the lithium-ion battery.
Let's get into the numbers from the PFS in just a couple of rapid-fire questions. So firstly, what's the initial project life of the refinery?
We've done a conservative 10-year life of operation, but we think this refinery will be operating for much longer than that, but we've stuck with the 10-year as a conservative base case.
And the estimated capital expenditure?
So $491 million, and we can pay that back in about 1.5 years.
Is that US or Aussie?
That's US $491 million.
How much revenue do you expect this thing to spit out over the initial 10-year period?
Over the 10 years of operations, around $14 billion of revenue and cash flows of around $4.5 billion.
Have you wrapped a net present value around the project in today's money?
Today's prices, it's $3.5 billion US and an internal rate of return of 98%.
How much product are you aiming to process through the refinery and will it all come from your own mine, or are you also looking to process third-party ore, which I think you said you were, but how is that going to hang together?
We'll work with our third-party feed providers like Trafigura. They're the largest nickel trading house in the world. So about 50% will come from them and 50% from our mine. And we're looking to around 43,000 tonnes per annum of nickel, which is a globally significant Class 1 nickel producer.
Okay, so it's a big project by any scale. Do you have any ideas about how you'll fund it?
We're looking to bring in the funding partners from the downstream. So we have EcoPro, which is the largest cathode manufacturer, as a major shareholder. We also talk to all the major players in the lithium-ion battery industry. We believe the capital will come from them through joint ventures, prepayments on offtake, and associated with that final product, which is for the lithium-ion battery.
Scott Williamson from Blackstone Minerals. Thanks for joining me on Bulls and Bears today. And remember, we're only here to give you information, not advice, which you should, of course, seek independently. I'm Matt Birney, and this is Bulls and Bears.
For more public company CEO interviews, go to the Money page at 6pr.com.au and click the Public Companies tab.